All right, buckle up, everybody. We're about to take a deep dive into intraday trading. And you know what? We're not just skimming the surface here. We're going deep, really deep, into the strategies that can make a difference in your trading. Specifically, we're going to be digging into how to make money in intraday trading. It's by Ashwani Gujral and Rachana Evaija, and we're pulling out the absolute juiciest, most actionable bits, the stuff that can actually help you make smarter trades.
That's exactly it. We're not just summarizing the book. We're breaking it down, analyzing it, and pulling out the nuggets. The kind of stuff you can actually use, put into practice.
Yeah, and one of the things that really grabbed my attention right away was the story Gujral tells about giving a speech at MIT. He compares the return on investment, the ROI, of like a typical engineering career path with the potential of trading. And I mean, come on, who wouldn't be interested in that comparison?
Oh, absolutely. That's the allure, right? It's that entrepreneurial spirit, that desire to be in control. And the potential, the unlimited earning potential that just draws people in. Okay. But let's be real, the book doesn't sugarcoat it. It takes serious dedication. This isn't like, some magic button you press and suddenly you're rich.
Right. Definitely not a get-rich-quick scheme. But something else that really stuck with me was that story about Roy Raymond, the founder of Victoria's Secret. So he builds this massively successful company, and then what does he do? He sells it for $1 million. $1 million. Can you believe that? It just seems like there's a big lesson in there for us as traders, don't you think?
Oh, absolutely, 100%. I mean, Raymond definitely did a lot of things right, but that early exit, leaving Victoria's Secret so soon, it really highlights how important it is to maximize gains, right? Don't cut your profits short. Let those strong moves play out and have those exit strategies planned out. Otherwise, you're basically leaving money on the table, serious money.
Makes total sense. You don't want to miss out on those big wins. So we're picturing ourselves riding these waves, right? But how do we even spot those waves in the first place? The book talks a lot about moving averages, and honestly, those always seemed kind of complex to me. Can you, break them down for us, make it simple?
Sure. So the book really focuses on three main moving averages: the 20-day, the 50-day, and the 200-day. And they basically represent different time frames.
Yeah.
Short-term, medium-term, long-term trends, Think of it this way. The 20-day is like a speedboat. It reacts quickly to every little price change. Then you've got the 50-day. That's more like a yacht. It's following the general direction, but it's smoother, not as sensitive to those small fluctuations. And then finally, the 200-day, that's like a giant cargo ship. Slow to turn, but it represents the overarching, the big picture trend.
Okay. I'm starting to get a much clearer picture now. Those are some great analogies, by the way. But how do we actually use these boats to make trading decisions? The book mentions something about Lilliput candles and phases, like contraction and expansion. Can you explain what that's all about?
Yeah, so Lilliput candles are basically those indecisive little price movements that happen when the market is kind of consolidating. It's like it's holding its breath, gathering energy for that next big move. That's the contraction phase. And then when you start seeing those candles getting bigger, that's a sign that, hey, we're moving into the expansion phase. And that's where the real opportunities are. That's what we're looking for.
Got it. So by watching how these moving averages interact and by identifying those shifts from contraction to expansion, we can start to get a sense of when to enter and exit trades. It's like we're learning the secret language of the market.
Exactly. That's a great way to put it. And speaking of market secrets, one of those powerful concepts the book talks about is this idea of confluence.
Confluence. Okay, that sounds interesting. Is it like finding that sweet spot where everything aligns? All the stars are aligned, so to speak.
Yeah, you could say that it's like when all the signals, all the hints we're learning to recognize, they all point in the same direction. Imagine this, the 20 and 50-day moving averages, they're crossing above the 200-day. And at the same time, the stock is breaking through a key resistance level. With strong volume, that's a powerful confluence of bullish signals.
Wow, that does sound pretty potent, I gotta say. But you know what I'm thinking right now? What if all the signs are pointing one way, and then bam, the market goes in the complete opposite direction? Is there such a thing as like a reverse confluence or something?
You're right on the money with that question. And the book actually addresses that head on. You need to be careful because just like confluence can really amplify gains, it can also amplify losses.
So it's like we need to watch out for those bull traps where everything looks amazing on the surface. But underneath, there are these warning signs, these signals pointing to a reversal.
That's exactly what we need to be aware of. We'll dig into those traps and how to spot them in the next part of our deep dive. But for now, just remember this. Trading, it's not just about blindly following signals. It's about understanding the context, the bigger picture, and using your knowledge to make informed decisions.
Sounds like a plan. I'm ready to learn more. Can't wait to dive into those traps and how to avoid them next time.
We'll definitely uncover those hidden dangers and give you the tools to navigate them.
Awesome. Looking forward to it. Thanks for listening, everyone. We'll be back soon for part 2 of this intraday trading deep dive. See you then.
Yeah.
Okay, so we're back and ready to explore more of these intraday trading secrets. We left off talking about reverse confluence, which honestly sounds a bit like a nightmare scenario for any trader. So can you help us out here? Can you give us a clearer picture of what those traps actually look like, and more importantly, how we can avoid them?
Sure. It's all about being a detective. You got to be savvy, you know, and recognize when the market might be tricking you, setting you up for a fall. So let's say a stock seems like it's breaking out, right?
Yeah.
It's rallying, maybe even breaking through those previous resistance levels.
Yeah.
And you're seeing some of those bullish confluence signals we talked about earlier. You're probably thinking, okay, this is it, time to jump in.
Yeah, I can already feel that FOMO, that fear of missing out kicking in.
Exactly. But here's where you gotta think critically. Don't just get swept up in all the excitement. You got to zoom out, look for any signs of weakness. Maybe the volume is drying up as the price goes up. Or maybe there's a big resistance level just above, like a ceiling. You know, it could act like a ceiling.
So it's like a false summit. You think you've reached the top, but there's actually another climb ahead, and it might be too steep to conquer.
You got it, precisely. And this is where those moving averages we talked about, they become super valuable. Let's say the 20-day moving average, it starts dipping below the 50-day, but the price is still, trending up. That divergence, that's a red flag. That's a warning sign.
Interesting. So it's not just about the individual signals themselves, but how they relate to each other, whether they're confirming or contradicting the price action.
Exactly. It's like piecing together a puzzle. And sometimes those pieces, they just don't quite fit, even if the picture looked good at first. And remember those Lilliput candles, they can be really deceptive. They might look like a pause, before the trend continues. But they could also be a sign of exhaustion, like a warning that the momentum is fading.
Okay, wow. This is definitely making me feel a lot more cautious, which I'm guessing is probably a good thing. But let's shift gears a bit. Let's talk about how we can actually use this knowledge to protect ourselves. The book mentioned pivot points. Can those help us navigate these dangerous waters?
Absolutely. Pivot points are super helpful. They're basically price levels calculated from the previous day's trading range, and they can act as support or resistance levels. They're especially useful for intraday traders because they really highlight those potential turning points in the market.
So if we're seeing those warning signs we talked about, those divergences and moving averages, weak volume, and the price is getting close to a pivot point, that'd be a good time to reevaluate our position, right?
Precisely. It might be a signal to, tighten up your stop loss, take some profits off the table, or maybe even exit the trade completely. Remember, protecting your capital, that's just as important as finding those big winning trades.
Right. It's not just about making money, it's also about not losing money, which makes total sense.
Yeah.
But you know what, I'm curious, what does the book say about the psychological aspects of trading? Because I imagine that plays a huge role in our success or failure.
You're absolutely right. The mental game is huge. The book actually dedicates a lot of space to it. Gujral and Vaidya, they argue that it's just as important as the technical stuff.
Yeah, I can see why. I mean, trading seems like it would be an emotional roller coaster, Excitement, fear, greed, doubt. It's all got to be in there.
It definitely is, and that's why they emphasize having a solid trading plan. It's like creating a roadmap for your trading journey. So you're not just reacting emotionally to every little thing the market does.
So it's like you have a set of rules, a system.
Yeah.
That helps you stay disciplined and avoid those impulsive decisions.
Exactly. Your trading plan should include things like your entry and exit criteria, your risk management strategy, even your emotional triggers, what tends to throw you off balance, like the fear of missing out or a string of losses. Knowing those things can help you stay in control.
It's like having a pre-flight checklist. You've considered everything, assessed the risks. You're mentally prepared for takeoff.
Perfect analogy. Just like a pilot needs to stay calm and focused, even when there's turbulence, A trader needs to maintain that discipline. Stick to the plan. even when the market gets crazy.
Makes sense, but how do we develop that kind of discipline? It's easy to talk about, but much harder to actually do, especially when real money is on the line.
We're back for the final part of our deep dive into intraday trading, and I'm really curious to hear more about this unshakable trader's mindset, how to build that. It sounds like having a solid trading plan is a key part of it, right?
Oh, yeah, absolutely. The book actually compares it to a pilot having a pre-flight checklist. It helps you approach trading systematically instead of letting your emotions run wild and dictate your decisions. We talked about entry and exit criteria, risk management, even those emotional triggers. But there's one more powerful technique they highlight: back testing.
Back testing. Okay, that sounds interesting. Is it kind of like a simulator for traders? Exactly, yeah. Back testing is basically testing your trading strategy.
Yeah.
But you're testing it against historical market data. So you're running simulations to see how your plan would have performed in the past. It helps you identify any flaws in your approach, refine your entry and exit points, and it helps you determine if your strategy is actually profitable over time.
So it's like having a time machine for your trading plan. You can go back, see what worked, what didn't, and make adjustments before you risk any real money. That seems like a really valuable tool, don't you think?
Oh, it is, absolutely. It can also help you identify your personal trading style. Are you more comfortable with trend-following strategies? Or maybe mean reversion setups? Do you prefer short-term scalping? Or holding trades for longer swings? The answers are going to be different for everyone. And back testing lets you experiment, Find what really clicks with your risk tolerance and your personality.
It's like finding your trading DNA. That's a
Yeah.
great way to put it. I'm starting to see how all these pieces fit together now. Understanding trends, mastering the technical tools, managing risk, having a trading plan, back testing your strategy. It's not just about making lucky guesses, is it? It's about approaching the market with a systematic, informed, and disciplined mindset.
Exactly. That's the key takeaway. Gujral and Vaidya, they hammer that home throughout the book. Successful intraday trading. It's a combination of skill, knowledge, and that psychological discipline. And it's a journey. You're constantly learning. The market's always evolving, always changing. And the best traders, they're always adapting, refining their strategies. They're always seeking new insights.
It's like any craft, really. You hone your skills, you learn from your mistakes. You're always striving to improve, to get better. But I imagine it's easy to get caught up in the excitement, the allure of those quick profits.
Well, definitely it's tempting. But the authors, they really caution against chasing those quick riches. They say that consistent profitability, it comes from having a well-defined edge, managing your risk effectively, letting your winners run, and cutting your losses short. It's a marathon, not a sprint.
Right. Slow and steady wins the race. So, okay, we've covered a lot in this deep dive. Understanding trends, confluence, those tricky reverse confluence traps, mastering moving averages and pivot points, the importance of a trading plan and back testing, even the psychological aspects of trading. Wow.
It's a lot to take in. But remember, this is just a glimpse into what Gujral and Vaidya cover in their book. Consider this your starting point, your springboard into the world of intraday trading.
Exactly. And as you continue on your journey, remember this final thought from the book. If a convergence of positive factors can amplify gains, could a convergence of negative factors lead to amplified losses? It's something to think about as you analyze the market, assess your risk, and make those split-second trading decisions.
Always approach the market with respect and never stop learning.
Words to live by, absolutely. Well, that's all the time we have for today. Thanks for joining us for this deep dive into intraday trading. And to all our listeners out there, happy trading. May your charts be ever in your favor.
Good luck out there.